Hi, thank you for joining us here at Tax Talk UK, where we talk about all things tax and other important aspects of running your small business, being self-employed, working for yourself. So today I'm going to talk about basis period reform and why it's really important that you know about this if you are a sole trader and your accounts are not drawn up in line with the tax year. So just to clarify, so we're talking about sole traders. So if you're trading as a limited company, then this is not relevant and the basis period reform will not affect you. If you are operating as a sole trader and you draw your accounts up to the 31st of March or the 5th of April, then again, this will not affect you and you don't need to be doing anything differently. So the people that this will affect is those people who are operating as a sole trader and are not drawing up their accounts in line with the tax year. So in effect, from 23-24 is going to be a transitional year, but from 24-25 all sole traders will need to declare their profits in line with the tax year. So you don't have to change your accounting year in line with the tax year, but you will need to be declaring your profits in line with the tax year. And so really then the most simple thing is you may as well change your year end in line with the tax year, because otherwise you're adding unnecessary complication. You're still going to have the same tax impact as if you changed your year. So it sort of seems it seems prudent to change your year, but as I say, I just wanted to make it clear you don't have to, but the impacts will be the same. So let's say, for example, that you report your accounts, you make up your accounts as a sole trader to the 30th of September each year, so halfway through the tax year. And so when you make up your accounts in the September, those accounts are what's declared on the following tax year. So in effect, in that scenario, your accounts from the 1st of October to the 31st of March are being carried forward into the next tax year, and that's what you will no longer be able to do. So if you make up your accounts to the 30th of September, then in the tax return you will need to do the second half of one year and the first half of the next year, which, depending when your year end is, could mean having to get your accounts done very quickly to be able to have the information to declare the pro rata of that year in the tax year. So again, another positive for just simply changing your year end. So that's fine once you're up and running with that. But if you imagine at the moment, that second part of the year, so from the 1st of October until the 31st of March, at the moment you wouldn't be reporting that until the following tax year, but now you're going to have to report that in the current tax year, as well as the whole 12 months to the 30th of September. So in that scenario where you've got a 30th of September tax year, in the transitional year, you're going to have to report the whole 12 months to the 30th of September, and then the first part of the next year from the 1st of October to the 31st of March. So effectively 18 months profit in one tax year. So of course, this is why it's really important that people start considering ahead. Some people took advantage of the low profitable years through the pandemic to be able to change their tax year to have sort of minimum effect. It's important to mention that if you are impacted by much larger profits, again, it will depend on where your year end is in relation to the tax year. Then you are allowed for the transitional year, which is the year where you have to declare everything to bring everything up to date. You are allowed to spread the additional profit over the next 5 years if need be. So this is why it's really important that you're aware, because the tax year that we're shortly going into will be the transitional year, assuming that there's no delays on this. So it's really important that you are aware of it. I do feel that once people have transitioned to the new period, it will help people when they come to the end of their business, when they're looking to start trading, because of course if you're currently not working to a year end, there can be quite a delay from when you finish trading to when you pay your final tax. So obviously it will be helpful from that perspective, something that a lot of us don't think of when we're starting the business. We don't think about what happens at the end, but I always think we should always think about what happens at the end, because that helps us to understand things ongoing. So back then to this transitional year, when you potentially are going to have to report more than 12 months profits in one tax year. So something to mention on this is overlap profits. So if you are using a year end that doesn't tie in with the tax year, when you very first started your business, there should have been a period of overlap profits, and if this is the case, this will reduce the impact of having to bring everything in line and having to declare those extra profits. So what should have happened is the first tax year. So let's think of a 30th of September example. Let's keep with that example. So in the first tax year, you decide that you started on the in September, or that's what, for some reason you decided that is the best time for your business. So the first tax year you would have reported from the 1st of October to the let's round to the 31st of March. So you would have reported the 6 months of that tax year. Now, then in your second trading tax year, you would then have compiled your accounts to the 30th of September, a whole year's worth. And that is what would have been declared in your second tax return. So you can see here already that first 6 months has been included in 2 tax years, and you would have paid tax on that profit, but it was duplicated. So that is what we call overlap profits, the period of tax, the period of profits that effectively has been included in 2 tax years. And so all the way through your trading, that overlap profit should have been carried forward. And when you then come to realign everything, so let's say, for example, you do have an overlap profit. Let's say, for example, it was £10,000 of profit that fell in both tax years, that first 6 months profit in this example. So when you come now to the position where you have to declare all of the profit in that tax year, and you can no longer, that October to March can no longer shimmy into the next tax year. Now you have 18 months profit in one tax year, but you have this overlap profit that's been carried forward all the time. So now you can actually claim relief on that. So at that point where you have the 18 months profit, you can say, hang on a second, when I first started, I paid tax on this 6 month twice. In this example, it was £10,000. So now actually I'm going to claim relief for that extra profit that I paid at the start. And therefore in that 18 months profit, we declare in that tax year the 18 months profit, but we say, hang on a sec, we've also got this £10,000, and obviously it's likely that it's not going to be 6 months profit anymore, because the chances are that over the time your business has become more profitable. So 6 months profit may, and also of course with price increases and lots of other factors, it's unlikely that if when you first started a long time ago, 6 months profit was £10,000. It might now be that it's £20,000, but you still get that £10,000 to take off, because you paid tax on that £10,000 profit when you first started trading. So you can now claim relief on that. So if you've traded for a long time, especially if you've had handover or changed advisors through that time, if you don't do your tax return yourself, it's really important. Don't just work on the assumption that, well, I looked at my last tax return and there was no overlap relief carried forward. Unfortunately, for lots of people throughout the time that it has been not carried forward in the tax return. So you actually need to, if necessary, go back to HMRC and ask them to look at your first. They would normally look at the first 3 tax returns, and they would look at the basis period and the accounting period for the period that was included, and to look if any overlap profits had arisen for you to now. So don't, if it wasn't in your last tax return, don't just assume. Unfortunately for some people, it wasn't done properly at the start. Perhaps that first 6 months, perhaps the first tax year, nothing was included, and that then means that you've got nothing now to offset. But as I say, for those people, the current proposition from HMRC is that you will be able to spread that extra profit over 5 years, and that will be particularly important if you're close to high rate tax threshold, for example, where that extra profit could tip you into it. So the ability to be able to spread it should be considered if you are affected by that. So it can be quite confusing. I do feel that the simplest way will be to move your year end, because you'll have no advantage from keeping your year end as it was originally. It will just add more complexities into the compiling of your accounts. You will have to have the accounts done much quicker, because you will need the information for the tax year that period fell within. So obviously the example that I've given has been a year end of the 30th of September. Yours may be any of the other 11 months other than the 31st of March or the 5th of April. So just to recap, if you are a limited company, this does not affect you at all. It doesn't affect your year end for your limited company. That will carry on exactly as it is. If you are a sole trader and you are already compiling your accounts to the 31st of March or the 5th of April, this will not affect you. It will only affect you if your accounts are being compiled to a year end that is different. So anywhere from the 30th of April to the 28th of February, any of those year ends, you will be affected. The next year, you will be impacted by that. So it's really important that you take the time to work out exactly how that affects you. Have plenty of time to investigate whether you did pay tax on overlap profits when you first started trading. Make sure that you've got that information, and so that can reclaim to offset some of the additional profits that are now going to be declared. And of course, as we get close to this, we will talk more about this, and we will, of course, keep an eye on what HMRC are doing in terms of the timescales. But I can't stress importantly enough, if you are a sole trader and you do not compile your accounts to the 31st of March or the 5th of April, then it's really important that you take the time to understand how this will affect you, because it will affect you. And you need to understand how that effect is going to happen for you individually. Of course, if you need some help with it, then you should seek professional help. And as always, if you are seeking professional help, please make sure that the person you're seeking the help from is fully qualified to help you with what you're engaging them for, that they're a member of a professional body if relevant, and that they hold professional indemnity insurance. And if you are struggling to get your head around it, then that probably would be the way forward for you. Thank you very much for watching. As I mentioned earlier, please do take the time to subscribe to our YouTube channel, and thank you to everyone that already has done. Thank you. Goodbye.